Finance first, freedom follows. Welcome back to Think Freedom. Today we're going on a finance adventure, diving deep into Warren Buffett's investment strategies. And trust me, it's not what the media is telling you. Before we jump in, do me a favor. Hit that like button, smash subscribe, and ring the bell for more exclusive finance insights. Ready to uncover some secrets of the Oracle of Omaha? Let's get started. When you hear the name Warren Buffett, what comes to mind? The third richest person in the world? The greatest investor of all time? Or maybe it's his iconic love for cherry Coke and McDonald's breakfasts? Jokes aside, Buffett, known as the Oracle of Omaha, has been a household name in the investment world for decades. His approach to investing, deeply rooted in value, investing principles taught by his mentor, Benjamin Graham, has inspired millions. Buffett's investment philosophy seems straightforward. Invest in undervalued companies with strong potential for growth and hold them for the long term. This strategy has seen him amass a fortune primarily through his company, Berkshire Hathaway. Now here's where things get interesting. The media often zooms in on Buffett's stock picks with headline favorites like Apple, which makes up a significant portion of Berkshire's portfolio. But is this the full picture? Absolutely not. There's a lot more to Buffett's investment genius than just picking stocks. Section 1. The common misconception. Let's tackle a common misconception head-on. Many believe that Buffett's portfolio is almost entirely composed of publicly traded stocks. It's easy to see why. When Berkshire Hathaway's SEC filings are released, everyone scrambles to see what stocks Buffett is buying or selling. But here's the kicker. Only about 40% of his portfolio is actually in public stocks. Surprised? This misconception arises because the stock market is transparent. We can see all the moves Buffett makes. But what about the other two-thirds of his portfolio? What's he investing in that we don't hear about every day? It turns out Buffett's investment universe is much broader than many of us realize. In the next sections, we'll explore these hidden facets of Buffett's portfolio. From railroads to insurance and beyond, we'll uncover how the Oracle of Omaha diversifies his investments in a way that most media don't talk about. Stay tuned, because some of these insights might just change the way you think about investing. Section 2. Buffett's hidden investments. Now let's peel back the curtain on Buffett's portfolio. Beyond the glitz and glamour of the stock market, Buffett has made substantial investments in sectors that are essential to the economy, yet often overlooked. We're talking railroads, insurance, energy, manufacturing, and real estate. First up, let's zoom in on a sector that's a bit off the beaten track, but critical to the economy: railroads. In 2009, Warren Buffett made a move that some might have found surprising at the time. Berkshire Hathaway acquired Burlington Northern Santa Fe, LLC, one of the largest railroad networks in North America, with a whopping $34 billion. But why railroads, you might ask? BNSF Railway is one of North America's leading freight transportation companies, operating a rail network of 32,500 route miles in 28 states and 3 Canadian provinces. It covers key routes and connects major economic hubs. This network is crucial for transporting commodities like coal, consumer goods, and agricultural products, essentially the lifelines of the American economy. This acquisition wasn't just about owning trains or tracks. It was a strategic play in the grand game of the economy. Railroads are essential for trade and commerce, making them a pulse point for economic activity. By owning BNSF, Buffett gets a front-row seat to economic trends, commodities movements, and consumer behavior. It's like having his finger on the nation's economic pulse. Moreover, BNSF adds a steady income stream to Berkshire's portfolio. The railroad industry, with its necessity-based business model, offers a kind of stability that's hard to find in more volatile sectors. This aligns perfectly with Buffett's preference for investments that provide consistent, long-term returns. In addition, railroads are also a bet on the future of trade and infrastructure. As the economy grows and evolves, the demand for efficient, cost-effective transportation does too. Buffett's investment in BNSF positions Berkshire to capitalize on these trends. Now, BNSF generate $6 billion net income in 2022 alone. Some analyst even puts a $200 billion valuation hat on it, making the initial $34 billion investment an easy 60x. I know it's hard to value a private enterprise, but if that's true, BNSF can also take over Apple and become the biggest position of Berkshire Hathaway. Section 3. Insurance as a cash cow. Ever heard of Geico? 15 minutes could save you 15% or more on car insurance. Sound familiar? That's right, Geico is a part of the Berkshire Hathaway family. It's one of the largest auto insurers in the US. But Geico isn't the only star in the portfolio. There's also General Re, or Gen Re, a leading global reinsurance company. And then there's Berkshire Hathaway Specialty Insurance, which offers commercial property, casualty, healthcare, and executive liability insurance. These companies might not be as well known as Geico to the general public, but they are significant contributors to Berkshire's success. Insurance is the cornerstone of Buffett's investment empire. When we think of insurance, we often picture premiums, policies, and claims. But for Buffett, the insurance industry is much more than that. It's a powerhouse for generating investment capital, thanks to something called float. In simple terms, float is the pool of money that insurance companies hold temporarily between receiving premiums and paying out claims. It's essentially an interest-free loan that Buffett can use for other investments. This has been a cornerstone of Berkshire's strategy, allowing Buffett to invest billions in other ventures while the float keeps growing. This strategic approach to using insurance float for investments is quintessential Buffett. He looks beyond the obvious aspects of a business to find deeper value and potential. By leveraging these insurance subsidiaries, Buffett has created a continuous cycle of capital that fuels Berkshire's other investments. With these insights into Buffett's insurance empire, it's clear there's more than meets the eye. Up next, let's explore Berkshire's ventures in energy and manufacturing. Stay with us to see how these sectors contribute to the conglomerate's success. Section 4. Energy Sector Investments. Now let's switch gears to the energy sector. Warren Buffett's foray into energy might not be as headline-grabbing as his stock picks, but it's a critical piece of the puzzle. Berkshire Hathaway Energy is a powerhouse in this space, operating a portfolio that includes utilities, natural gas pipelines, wind power, and solar projects. They are household names like PacifiCorp, Mid-American Energy Company, NV Engri, and BHE Pipeline Group. This division is not just about generating electricity, it's about investing in the future of energy. From renewables to traditional power sources, Buffett's strategy here is clear: invest in essential, sustainable, and future-proof industries. Knowing what will not change in the next 10 years is more valuable than predicting what's the next trends. The energy sector's steady and predictable returns align perfectly with Buffett's long-term investment philosophy. Section 5. Manufacturing, retailing, and real estate. Moving on to manufacturing, retailing, and real estate. Sectors that might not be glamorous but are vital cogs in the economy. Buffett's investments here include companies like Berkshire Hathaway Home Services and Clayton Homes in the housing sector, Precision Castparts and Lubrizol in manufacturing, and Helzberg Diamonds in retailing. These investments reflect Buffett's knack for identifying value in fundamental industries. Manufacturing, retailing, and real estate form the bedrock of economic activity, and investing in these sectors is a bet on the economy's overall health and growth. For Buffett, it's not just about picking stocks in the market, it's about investing in the economy itself. And that's what these sectors represent, the foundational elements of economic progress. Section 6. The takeaway, what we can learn. So, what can we as individual investors take away from Buffett's diverse investment strategy? First, it's the importance of looking beyond the surface, whether it's a stock, a sector, or a business model. Buffett teaches us to understand the intrinsic value and long-term potential. Second, it's about diversification, not just in terms of different stocks, but in different sectors and types of investments, from public stocks to private companies and different industries. Third, it's about patience and discipline. Buffett's success didn't come overnight. It's the result of decades of consistent, principled investing, rooted in a deep understanding of how businesses and economies work. And finally, don't just rely on what the media feeds you. When it comes to investing, it's essential to do your own research. While stocks like Apple get a lot of attention in Buffett's portfolio, they may not always represent the largest or most significant position in Berkshire Hathaway. That's a wrap on our deep dive into Warren Buffett's secret investments. I hope this gives you a new perspective on investing and the legendary Oracle of Omaha. If you enjoyed this video, please give it a thumbs up, share it with fellow investors, and if you haven't already, subscribe to Think Freedom for more finance insights. Keep working towards your financial goals and be kind to the others. See you in our next video.